Guys, welcome back to a new vid. Today I'm going to be breaking down my model that I use really every day and for the past like 2 years. I've practiced this model and used it for the majority of my trading career, and I think that I can confidently say that when used right, this model prints. It really does. It always prints when you use it right though. You have to use it right. So I'm gonna just get straight into it. All right. So this model contains four concepts. Technically three, but I think the other one counts. So one is an inverse rally gap, and then the other one is a manipulation, and then the other one is change of the state, and then the other one is aligns with the higher time frame. So I think we all know what an inverse rally gap is. It's when we put in a rally gap and we run through it or close below it, and then a change of the state, pretty much, or a market structure shift. It's when we close below the last series of down close candles, and then manipulation obviously would be a SMT or just regular manipulation. And then aligning with a higher time frame means with aligning with PD rays or the natural flow of the higher time frame and where the trend is going, and executing internally on the 1 minute or 5 minute. Keep going with the higher time frame. All right. So I'm gonna show you what an example might look like in the charts. Okay, so I'm gonna just go look at the first just internal model on the 1 minute. This is on the 1 minute. So we can see we have a inverse rally gap right here, change of the state. You can see we have two big down close candles that close below this change of the state and the inverse rally gap, which I want to point something out. Most traders, IFEG traders, especially, I don't want to call anyone out, but the reason that sometimes IFEG trades get a bad rep is because they just don't work sometimes. But the reason is because you don't wait for it to close below either the inverse rally gap or the change of the state, which the change of the state adds more confluence to this trade. So that makes it just more, better than the IFEG traders. But yeah, so we have the change of the state that adds to the inverse rally gap, which gives us more of a sign of reversal, because sometimes the inverse rally gap will just get ran through, but we're just going to retrace to, some sort of PD array. Like right here, you can see this gets inversed, but we don't continue with it because we don't close below this change of the state right here. So with this model, we can see we have some external manipulation, and we also have some internal manipulation. My fucking god, I can't speak. Internal manipulation with this SMT. Usually you could just have this external manipulation and not look for any internal, but in this instance we have a lot of price right here, a lot of liquidity, and we have some 5 minute structure. I don't know if this is 5 minutes, 15 minute, but we have some 15 minute structure and most likely some 5 minute structure. And yes, you want to see internal manipulation when you're dealing with higher time frames, but with this trade we have the SMT, then the external manipulation right here with this high, and so we have this checked off, this checked off, this checked off, and I'm going to tell you how this one is checked off. So basically, right here we can see we're in a big 1 hour rally gap to the left of us that's, wanting to go bearish. Either if we want to go bearish, the long term or the short term, we still have manipulated this high and not ran through it. So we're going to see some sort of down move. So we I end up targeting standard deviation, which I did not mark out in this trade, but it lined up perfectly with this 1 minute rally gap that I wanted to see price come back to. And yeah, so we have that higher time frame alignment with the 1 hour, and then this higher time frame internal high. But overall, with this higher time frame, I wanted to be aligned with it. So we had the 1 hour that was rejecting, that either if we wanted to reject or, um, I mean, have a short-term retracement or a long-term retracement, still we're going to get a retracement with this 1 hour being here, and then the manipulation just adds to that. So, yeah. All right, I'm going to do another little example right here. Okay, where's the execution? Right here. All right, so this is one where there really isn't a big internal manipulation move. There's one right here, but I'm going to get straight into the higher time frame alignment because I think this one is way more important. So we have this big SMT right here on the higher time frame, and this is very important for this bearish bias because you can see, you know, right here we respected this fair value gap right here, and overall just been pretty bearish, and we also have all this liquidity down here that I want to see taken with this bearish SMT. You know, it's starting to add up into the higher time frame. And then also earlier during this week we tapped this daily fair value gap, which it's on the 4 hour, but I should have went on the daily. And then you can see respected this PD array, ran through this, closed below that, change of the state, and then we also have all the sell side, and then sell side right here. That is right here. So internally going into this day, I'm going to be looking just for my model, but I already have this manipulation confirmed. So, yeah. And then at open, we come up, internally manipulate this high, or you can just call it manipulation, but I would call it internal manipulation because we already have manipulation right here. And then you can see we put in this inverse value gap after taking this high and putting in some structure, and then the change of the state. And you notice I always wait till we close below. I think I said this earlier, but you always have to wait until the candle closes below. Otherwise, this could just get inversed and we could just go run up all the way to these highs and just be inefficient, right? But the efficiency of this is that we wait till the close below and confirmation. So on the next candle, you can just enter when the next candle opens and you'll be good. You'll have the entry pretty much set right here. Yeah, and then I target this. I believe this is not data low, but this is just internal manipulation. I was expecting a lot from the market at this moment because, you know, just the displacement and the amount of higher time frame influence we have. Yeah, this is value gap right here. And then just targeting internal, external, internal, bam. So you can see we got the IRPG here, change the state, and SMT, and then some manipulation right here. So always just having the manipulation checked off. That's the first thing that we're looking for. We're looking for, is it, you know, is this respecting any sort of, you know, higher time frame imbalance? Are we with the higher time frame? Because I could take, say, well, let me see something that might go against the higher time frame. So overall on this day, I think we were bullish, right? But this might, you know, this 1 hour value gap might bring us down bearish after manipulating this. So taking, say, this long after, oh, it's actually my model right there. Taking this long after seeing this down move and seeing this manipulation and seeing this higher time frame structure get put in wouldn't be very great, because if this was to continue and this is just a retracement move to come take this high, which it didn't happen, but it still could happen, that would be against the higher time frame. This is a prime example of what this, because now this pretty much confirms bearish, this candle with the 15-minute change in the state. So yeah, and then I'm going to talk about the meaning behind, you know, what these imbalances mean. So meaning of the IFPG is it confirms price might want to reverse, but actually hasn't confirmed. The change of the state confirms, but the inverse value gap just explains what the volatility might be, and just gives us more confluence instead of just a change of the state, and also adds, you know, conviction and quality of the trade, which I just said. And then we have manipulation or SMT. So like the sole basis of this model is off of manipulation. We need to see manipulation before anything we're looking for, and it should be clear. It should have a clear draw. It should be either in a PD array or going to some sort of higher time frame thing that is aligned with a higher time frame. So yeah, manipulation is very key, because it's essential to any reversal, because every reversal has manipulation. So, and then change of the state. This actually confirms the reversal, and since price is manipulated now, we need to close below the last series of down close candles to confirm that. And it can also determine like the quality of the trade, because we can get a displacement leg to go through the change of the state that might be 8 candles, and this change of the state is still the change of the state. So we could have had 8 candles here and then displaced, and that would have really lowered the quality of the trade. So you can kind of also use discretion for this trade to be like, hey, this is not a good trade. But with just the IFEG, you're just taking that off of, because the IFEG is the first one that gets ran. So you might be taking that, and then it might take another 10 candles to get to the change of the state. So it's just not great to use just the IFEG, because adding the change of the state adds, that extra is this really good trade? And then aligns with the higher time frame. Make sure that the trades will be aligned with the higher time frame, just the natural flow of price action, and will make the price go to your draw quicker. Because if we didn't have this here and we were just shorting, say we actually have manipulation. Hold on, why is this not straight? All right. Say this is just some liquidity. This is a line. This is buy side liquidity, and then we have this change of the state right here. If you're taking this short, it's either probably not going to play out, or or it's going to go just here and not very fast. So the higher time frame adds fastness and just efficiency, and just overall, just you're taking trades with the natural flow of price. You're not trying to go against it. But yeah, I'm going to show you a couple examples in the chart, recent trades that I took in the last week, and yeah. All right, so here is actually a setup that just played out today. I didn't trade today because we have FOMC later today, so I'm just waiting for that. But let's look at this setup. So one thing we can see on the higher time frame, we've just been respecting all these bearish imbalances. Respected this 1 hour, had a down move off it, and then we also had, just remember this SMT right here, bearish SMT brought us down, generated liquidity, and we also still have this liquidity here that hasn't been taken. Well, it hadn't been taken here yet, but okay. And then zoom into the 1 minute, so we can see that market open right here, this little green line. We put in this change of the state. Now this is kind of a big spread of a trade, and I wouldn't take this just because the risk would be kind of skewed, but it still shows the model playing out here. So we can see we have our rally gap right here, 1 minute IFEG, change of the state. All right, now look at the higher time frame. So basically we have this little 15-minute rally gap right here that plays along with the higher time frame, with the SMT getting respected and coming down, and then also this 1 hour getting respected and giving us that down move. And you can kind of see the fractability of this. Look at, we have where the fudge did my SMT go? Okay, we have this SMT here, and now you can look, we also, who texted me? Okay, hold on. And then we also had, look at this 1 hour the other day. Look at this. Okay, SMT. Same thing with the 15-minute rally gap. So it's a little bit of fractal trade also. But okay, now we can look at the trade. So we have a 15-minute rally gap. We come up to it at open. I want to see if we want to reject this. We end up doing that, and we end up wicking that on the higher time frame. As you can see, wicking it, not closing above that. And then we also put in this bearish SMT, which now we're aligned with the higher time frame. We have manipulation. We also have manipulation inside of a PD array, which is the 15-minute rally gap. And then we have great displacement through this 1 minute rally gap. And here's what I was saying with the being able to see the quality of the trade. Now, I wouldn't say this is the best quality of this model right here, just because the spread is so like it's 152 points just the to get the change of the state. Now we do have lots of volatility as we can see after market open, but still we also have, how many candles is this? It's a 11 candle displacement. So usually I want to take like max 4 candle displacement, but still we're looking at the model in just a model sense here, not if we would take this, but you could probably risk it either from us coming back to the 1 minute for rally gap, so this high is protected, also coming back to this 15-minute for rally gap, and then you could target whatever, this sell side, or take runners, this sell side, and it plays out extremely well. So yeah, I'm gonna show another example of a trade that I took last week. The last setup we're gonna be looking at is a long. I've only shown shorts, I don't know why, but this is actually a really good setup. So looking at the higher time frame, we can see that we're in between 4-hour for rally gap and also a daily for rally gap. But I want to see us come more into this daily for rally gap. Also, maybe tap the midpoint of it, coming off of this 4-hour for rally gap. So zooming in on the 15-minute, we can see we've already put in a bullish SMT and tap this 4-hour for rally gap. And we also have been just respecting bullish imbalances and continuing to be bullish. So right here we can see here we have this little baby internal SMT which gets put in. This is, most people would be like, oh, there's no manipulation here, because this would be the original manipulation leg, which has no for rally gap, which this one actually does, because this has manipulation right here, which is the SMT, and also all the examples I've shown have SMT, but you can really just use manipulation. That's fine. Just SMT adds more value to it, because one asset is weaker and one asset is stronger. Okay, so I want to see this get ran through. Oh shit! There we go. There we go. I zoomed in too far. I mean, played it too far, but I would place a long right here. Maybe stop at the bottom of the for rally gap, and target here maybe for partials, and I want to see it come up here for the full position. But right now I'm just gonna take it to here. And bam, that plays out beautifully. So we have the inverse rally gap right here, and then we have the change in the state with the higher time frame alignment going to another higher time frame balance. It's just the natural fall of price, and we also have manipulation. So these are kind of like it all comes together very nicely when you use it. Is that if you want to actually print with this model and make sure you use it good and it'll work, one, you have to make sure that the candle closes above the change in the state or below it, and you want to look for 2 to 4 candle displacement. So basically it should take maximum 4 candles for us to go through this change of the state, for us to enter. If it's more than that, you should probably call off the trade, because it's gonna be very inefficient, and it's not gonna go to your draws quickly because it's less volatile. I hope you guys might want to apply this to your trading, or take little samples of it, because I see on Millen when doing the close above the change of the state and inverse rally gap in this scene. I haven't seen anyone talk about it, but it's really important to just confirm, that we are having a reversal. So yeah, yeah. I hope you guys enjoyed this video, got something out of it, and hope you guys apply it. All right, peace out. Have a good day, guys.